right, Mish, welcome back to our Monday video, and we've got quite a Monday to talk about. So we gapped up today. Some news on the tariffs, but we still are not at the big tariff April 2nd day. But we've got a big gap in what looks like a bullish day. What do you do with this?
Well, first of all, last week you kind of had to anticipate and have a list of stocks that sort of turned around on Friday. Friday was, I felt, a very key day. We've had negative Fridays. It was a positive Friday. And a lot of the instruments that I have been watching sort of follow through on whether or not they hit a major moving average and bounced, or they had a mean reversion off the real motion and bounced, or they just didn't break down as hard and bounced, or they had one of our typical reversal bottoms, glass bottom or brick wall bottom. So there was a list. And so I think obviously it would have been great if people had bought some of that list. I know I did. Actually, last week I bought Tempest on Friday because it was one of the stocks that I'm going to show you. But the bigger question is, what if you didn't? What if you came in today cold and you wanted to find the stocks that gapped? One thing that we're not going to get into detail about, but obviously MarketGauge has been very keen on for the history of MarketGauge, is opening ranges. The bigger the gap, the shorter the opening range. You can buy on a 5-minute, sometimes even on a 2-minute. But essentially, even a lot of the stocks that took off today and kept on taking off broke out of a 30-minute. So we're not going to get into all of that because that would take too long. But what I want to do is start off with a smidgen, Geoff, of macro, because yes, tariffs are in the news. And I just do want to say that saying that some countries may have easing on the tariffs doesn't really mean very much. I just want you to know this is a guy that I follow and think is brilliant. This guy, Julian Brigden from Real Vision. He's one of the, well, he's not from Real Vision, but he talks there a lot. He said that 16 countries make up the bulk of our trade deficit. And none of those 16 countries are the countries that Trump is talking about. So this is a good session today because we're talking about a gap up and we're talking about, can there be follow through? So
Right.
here's, right. So
Yeah.
go ahead. I'm sorry.
No, I'm agreeing. I'm just agreeing with you. Gap up. What do you do?
Yeah, and so we wanted to show you this RSP chart, which is the equal weighted S&P, mainly because if you read Geoff's Outlook this weekend, which I did, you know that this is one of the charts that he was basing off the potential of the rally, number one. Number two, it's been outperforming some of the other indices. And number three is if the market continues to go up, this will continue to go up as well. I thought those were all great points, Geoff. So in this particular area, though, we just want to show you that it looks like actually it started to underperform today, the SPY, which is definitely interesting. And of course, we're still in a bearish divergence on momentum. The 200 is above the 50 here. The 50 is above the 200. And we're just clearing that 200-day moving average. Here's your 6-month calendar range low, the red, kind of a classic reversal bottom, peeked its head through. And really the day to have probably triggered would either been this day here on March 14th or the next day, which was last Monday, March 17th. But again, this is RSP. If you look at the difference between this and SPY, and this was one of the dailies that I wrote, which is really important, which is the difference between the bottom that we saw.
You want underscore, not plus.
Oh, what am I doing? Plus? Jeez.
Yeah.
Even with my glasses, how pathetic is that? Okay. I think we had shown this maybe even last week, the difference between the 2023 bottom. I just want to go back and show it again because it's so significant. Here was that 2023 bottom where we broke down. We cleared back over the 200 with just in a few days, then the 50, then the 6-month low, and then the 6-month high, and off she went. The difference now is that we have broken down under everything, of course. We did have a reversal bottom and a new 60-plus day low and a close above it before that. And today was the gap back finally over the 200. Looks like we did manage to close above the 200, but not above the 6-month calendar range. So if you came in today and you were looking at a 5-minute chart based on this gap, basically when you have these gaps, you just don't want to risk under the gap. So if the low today was 570, you would have definitely probably had just stopped right under 570. Well, it's 570.20 under 570. And bought, again, depending on the time frame, this was a significant gap. I probably would have recommended a 5-minute OR. Now, I haven't looked at the 5-minute chart, but assuming that didn't work, then of course you'd go to a 30. The question is, though, what would you do from here? And I think
Right.
that's what we really want to discuss. From the macro standpoint, this certainly helps with the RSP showing also signs of strength, but we need 2 days over the 200 to confirm a phase change, number one. And number two, unlike 2023, we got so many more hurdles to deal with. We've got that low of the 6-month calendar range. And then way up there, we've got that 50-day moving average in the blue. And then way up above that, we got the 6-month calendar range high. So I guess what we're really going to say here is that day to mini swing trading, unless you have found instruments, like I said last week, and we're going to go through some of those that you really felt may be good to hold. Now you can trail up stops a little bit for more swing trading. It's probably the best thing to do when you're still in a bear market, and we are in a bear market, not so much in the SPY, we're in distribution, but if you look at the Russells, and you're not sure how far it's going to go. So trim and tail, trim and tail. That's always the key. And these gap highs, gap ups are gifts.
Yeah. Yeah, so let's dive into some individual names
Yeah.
and let's just look at how you'd trade them. Actually, before you do that,
Mhm.
um, looking at the market perspective, I'm just going to echo what I said the other day. Today, that 570 low is a really significant level on the spies, and that's one thing to keep your eye on. If we're going to go talk about different position or different individual ideas, um, moving forward, as long as we stay above that 570 level, um, we are, moving higher or at least consolidating um, positively. But that's a pretty close number. We That's less than one average range away, but it's a very pivotal right now.
Yeah, and if I had to make a guess, I mean, we all agreed, and if you read my Outlook 2025, you know that I thought the first quarter was going to be choppy, and so far that's the case. And I still believe that we could see a gain at the end of the year in the S&P, maybe 3 or 4%, minor gain, but still a gain. I don't think we're crashing. But one thing we do know is that there's going to be volatility. So this could be a rally, it could roll over, it could test the lows, it could go lower, come back again. You really, I think, have to have more of an active mindset. And what really upsets me is when I hear people constantly going on media. I almost think they're talking their book. That's what it's gotten to, where they keep saying, just keep buying the dip, keep buying the dip, keep buying the dip, because this market's going to reward you. And I always wonder who they talking to. Are they talking to people who have such deep pockets? What's the reality of most investors? And I think you and I talk to most real investors, which are people who don't want to take 20% hits and then turn it into a 40% hit and averaging down onto losers. So that's something to be aware of. This market isn't out of the woods, but we're
No,
getting a relief rally.
definitely not out of the woods. No.
Definitely not out of the woods. All right, but let's look at some. So again, I'm trying so hard to be consistent. And when I say consistent, I mean, what did I talk about in my outlook? I had runner-ups. And this was one of my runner-ups was advanced micro devices. I felt where NVIDIA, which by the way still didn't clear its resistance, even though it rallied today, I felt that the software dominated ones and maybe some of the ones that were coming out of a base would be better than the ones that are just dipping from all-time highs. And so, again, this was a classic, here's a new low, gapped the next day here, never broke that low, gapped again. So this thing has been gapping all the way. And it started outperforming the SPY the next day after that new all-time low. And if you look at the momentum here, it cleared the 50-day moving average here on the momentum before it
Yeah.
finally did it here. So AMD all around was a great one to try to bottom pick, so to speak.
Yeah, absolutely.
Right. So now what happened today? So when this opened today, this also, I watched it open this morning. I really was pissed off at myself last week, by the way, because I wanted to buy it at 105 and it opened at 105 on this day. And I thought, let's just buy it. And I didn't. I waited. But it's okay. You know, you miss stuff all the time. That's not the measure of a good trade, is what they miss. The measure of a good trade is a good trader is, you know, having patience and maybe missing stuff, but also not getting in prematurely. So the question is, what do we do now? So here we have our first day over the 50, by the way, slope somewhat declining, and look where it stopped. Oh, sorry. It stopped right at the 6-month calendar range low, right? So that tells me now, again, this is a real test for this particular stock. If it continues up from here, you're now going to have to adjust your risk. So today's low being 109.40, figure 109 would be a good risk, but you're still talking about a pretty good risk here from 115 to 109. So ideally, this would be an inside day, confirm it, and then take off. But right now, I would say that this was a really nice big move, $10 from here, but a great one to, if you were watching this, to buy as soon as it cleared that 50, soon as it cleared the opening range, and then boom, you could have even taken some profit at the end of the day against this, or held it knowing now that you would put some kind of a no-loss stop.
Yeah. And from a tech stock perspective, if the tech's run, this is definitely buying one of the ones that got beat up and now outperforming.
Right. I love this stock. I mean, I loved it even when I wrote my report back in 2024, the end. Now I'm going to also high on my list. This was one of my top 10 picks on my report was IBM. So again, I want to be consistent. I want to come up with new things that you never heard me talk about. So this was great because IBM, we got in here, right? And then you had that great post-earnings gap. And this high right here was 229.47. And the low on this correction was 237.22. So it held the gap. So I don't know if I would have necessarily been buying it on the way down, but after an inside day Friday, right? And you can see, even though it's still underperforming, coming back through that 200-day moving average, still not in a negative divergence because the 50 is above the 200. Still, this has been over the 6-month calendar range. And one of the things that Geoff, I know, has taught you is that if you're going to go shopping for things, I mean, yeah, you can find your AMDs, but you really want to stick with things that already have proven to you that they're in a run. And when the market corrects, especially if they're not filling these major gaps and get back through a 50-day moving average, they're probably a good buy. So I like IBM probably the most because of its just strong position. So maybe I wouldn't have necessarily bought it today because there were more fun things and we're already long. But if I am going to consider adding to this, I like the positive slope. And I like the fact now that I have an interesting risk under today's low, 245. It closed at 248.50, not the $8 range we'd have to risk in AMD, just a few dollar range here in a big expensive stock. So if we confirm tomorrow or break out, maybe even we want to say over 249.50 or 250, you know, you have a $5 risk here on a good, strong stock.
And zoom out so you can see more history. And you'll see that it's corrected right back down to the highs of October and December.
Right here.
Yeah.
And you know, it held that gap here. I mean, you could say that it filled the gap here, but I was really more measuring it based on this gap. New year, cleared that
Yeah, of course.
cleared that January high right away, and then boom, never filled it. So that's number two. So I wanted to show you two different personalities. The other one, and again, I'm gonna, you know, I'm very honest, so I'll tell you, I watched this and I kept saying, if this gets to 180, I'm gonna buy it. And it got to 180 and I got spooked. And that was, actually it got lower than 180. I think the low here was 177, but I should have bought it with a little bit of a risk, and I didn't. But coin is, you know, I still think is a really good stock. Now, when I say buy it, I don't necessarily mean that I think this thing is going to go back up to 350. Absolutely, I don't even think it will right now. But it was such a good one against that major support. If you go back here, it also held these lows back here from 2024 November. But you could see it broke down under everything here. 6-month calendar range low, 50-day moving average, 200-day moving average, not quite in a death cross yet, underperforming, maybe slightly sneaking its head above here. And also in a bearish divergence on momentum. But this was such a clean mean reversion trade, and today's gap, I know it opened up at around 190 or so, I think. Maybe, what did it open today? Like 190? Yeah, it was like 194. Okay, so I saw the gap. It was another great one to buy on an opening range breakout. And then boom. Now you have to think about, does this thing really get through 204, 205? We're going to start to get into some resistance. But it was a great one if you're on the list. Coinbase was not on my top 10 list, by the way, this year. It was last year, but not this year. But still, Bitcoin is something I'm watching.
So where do you think you put your risk on a swing trade on this?
If you just got in today, you mean? Or if you're going to go in
Just in
tomorrow?
general, like if you're setting up, if you're thinking about getting in, where do you, I always try to look at, find a point that is, I would call it my risk level or my inflection point when I'm just wrong if it gets below that level.
Well, there's a couple of ways to look at it. First of all, if you don't really want it to wait for confirmation, look at that big down day. The top of that down day was 206.84. So we haven't even really taken out that big down day yet.
Right.
And it wasn't really that strong a reversal bottom. We made a new low here, inside day, and then it didn't really cleanly close above the high of the outside day. So I would say, to me, if I were going to, let's say, wait one more day and buy it up over 207, let's just call even numbers, I would probably want to use the low of today, which is 194. So that's a big thing, $13. You have to think about that. 13.
Yeah, but the average range is almost 12.
Right, exactly. This is a volatile stock. And by the way, it's not 13. I made a mistake. If the low here is 194 and we're buying it at 207, oh yeah, no, that's $13. So I would probably say maybe I'd give it a little more. You see how you have these three wick highs here, kind of matching maybe that candle low. So I would say at this point, 190 might be max to give
Yeah.
this. And then if you start to get up here, 225, 228, 233, I would definitely be looking to take some profits up there and trail up my stop.
Yeah. So that's 3-1.
Yeah, that's 3-1, exactly. Okay, next one, actually two more. Those of you who know us know that you're no stranger to this trade. My goodness. Now, this has actually been something I've sort of buy and held, which is an unusual stock for me to buy and hold, or just unusual for me to buy and hold. But that I'm 100% convinced Rivian's going up. It's one of those. And today was a really nice day because this thing could not get through 12. It kept chopping around. The reason why I held it is because it didn't break 10. Under 10, I was done. But it's not like I paid that much for it. I bought this thing a couple of times, gotten out, gotten in, gotten out. If my average price right now is probably around 12.50. So I could have easily just day traded this today, bought more, again, on the move up. It went straight up. And now, though, look where it stopped. It's outperforming SPY, by the way, and the momentum is getting close. Look at this.
Yeah.
You're still in a bullish phase here in momentum. So you've got a little bit of a bullish divergence here. Look at that dot's right under the 50. So now the test, and it's over the 200, the test is going to be, I think, not just the 50-day moving average, but look, you have the 200-day, you have the 6-month calendar range, all coming in around 1275. So if you're day trading, today was great, and maybe you took some profit, maybe you took half off and you want to see what happens tomorrow. If you really want to play this tight, I probably wouldn't want to be in under 1150. I risk about $1. Well, it's even less than $1 if you got in at like today's low, which was today's low was 1174. But if tomorrow you wanted to get in, I would probably now at this point say for a position, I would wait for it to clear all of this, 1275, and then probably risk down to around that 1150, thinking that maybe this thing has some juice now to get back up over to about 1480.15.
Mm-hmm.
That makes sense?
Yeah, totally.
Yeah. And then the last one we're going to cover right here is going to be Tempest. Now, I only learned about Tempest this year and actually learned it from Alan Friedman, our AI guy. He told me about this because Tempest is doing AI in the biotech space, and he thought it was a really solid company. This one, since I told you what I didn't buy, this one I actually did buy on Friday. because I liked a couple of things. By the way, there's no real motion here because it's a relatively new issue.
Wow.
But it started to look good against the SPY back here. And you had a nice bottom against, and look at the difference between, again, Rivian, AMD, even SPY. This never broke, except for IBM, this never broke the 6-month calendar range high. Strong stock. And by the way, interesting, Geoff, look how the 6-month calendar range from July and the 6-month calendar range from January are completely lined up.
Yeah.
Isn't that-
I really like this one.
Yeah,
Not only that, it's an IPO from July.
yeah. And it's not a SPAC, by the way. So yeah, so look, it tested here and I waited and I waited. And then on Friday, I liked that it was starting to take out all this basing action. And I got in at around 48. And look at this thing. It got up to 59 today. So that's
Nice.
a nice little move. Now, would I do more? I would wait. First of all, it has to hold today's low. So now at this point, I have a cushion. Under 54, I'll just get out and say, never mind, let's take a look fresh. But if it holds these levels and it gets another day above the 50, or maybe just has an inside day tomorrow, but holds and confirms back to a bullish phase, by the way, and this is one of the few stocks that are in a bullish phase, there's no 200-day here, then I would say this is a stock that, could outperform, and maybe I would start looking for a move maybe back up to around 75.
Yeah. I like it. This is the kind of relative strength that I definitely like. Everything about it.
So really, to sum up, we've got two ways on these gap days: is find ones like IBM and this that actually are outperforming the whole market because they never even broke down from their January 6-month calendar range high. In fact, tested it, and in IBM's case, even stronger. Or find a stock that has been so beat up that had a great reversal bottom, and now on this gap is either testing a major moving average, or has enough distance between it and a major moving average where at least you're getting some kind of a rally buy, as opposed to, I'm going to hold on to this stock forever.
Yeah, and thinking about the AMD scenario, that was one of the ones that did get beaten up. It did also come down to a level that has been support before, but it's over its 50-day moving average, right? So we like IBM, it's over its 50. Like Tempest, it's over its 50. AMD is over its 52. It's still 50. That's still a 50-day moving average, even though it's in a downtrend. So that should be good support for it, if it's good.
Yeah, and the last thing I'll say is, when you listen to these people on media telling you to buy the dip, these are the dips you want to buy, not the free falling stocks that have already flown high and you're kind of hoping that they do a lot better. Like Nvidia, to me, when you had a stock that went from here down to here, okay, maybe you're getting a little bit of rally here. But look at what we're just talking about. We're talking about stocks that either cleared the 50 or retraced down to the 50 or their 6-month calendar range low or their 6-month calendar range high. This was just, I think, a wing and a prayer to get in saying, it's cheap, hoping that this thing now can take out these levels. We'll see, because if it doesn't take out these levels, NVIDIA, especially after that big conference that happened last week with Jensen, then there's no reason why this can't roll over and maybe make another new low. Now, again, if it can't even get up here today. It had a gap, but it wasn't all that impressive compared to the ones that I just showed you. So it's not like I hate saying to buy the dip. You just have to understand that there's buying the dip, and then there's buying a falling knife and getting lucky. And that's how I see this one.
Yeah, and everything has its own cycle. And in fact, I did triple play last week as a webinar, and the whole point there is you look for the stuff that is working now. And as you pointed out, AMD is working now on the triple play basis, on the leadership basis, even though it's beaten up. So the leaders aren't always at new highs. And
Exactly. And that,
AMD is just struggling here. I mean,
right.
sorry, NVIDIA is just struggling.
And I just want to pick up on the point you just said, which is cycles. Everything goes through a cycle. Even the highest flyers go through cycles where they start to become out of fashion. That doesn't mean NVIDIA isn't a great company in the future of AI, but it doesn't matter because it's just the nature of life. And you saw the evidence. Advanced Micro Devices had a horrible cycle, now possibly bottom, and NVIDIA had an unbelievable cycle and now possibly top. But that doesn't mean you don't get gyrations in between.
Right.
Okay.
All right. Well, we covered a lot more
We
than I
did.
thought we were going to cover.
Yeah, well, there's always so much, and it's such an interesting market right now. And it's a difficult market, by the way. I will say that. Today looks easy, but it's not easy because we have a lot of headline mania controlling the market, and that makes it tough because you don't know tomorrow anything could come out to change the whole scenario. So just be frosty.
Yeah. All right. Let's
All
call
right.
it a wrap. Thanks, Mish.
Thank you, Geoff. Bye for
Bye.
now.